The challenge is that when you are in a drawdown, you have to reduce risk significantly, and you have to make your way back much more slower than if you were not in a drawdown. And that's effectively just the mathematics on how things work. So for me, it was about being disciplined, being patient, wait for the setups, and slowly getting back into the profit range.
Okay, welcome everybody to another funded trader of Trader Pool. Today, Luis is with me, a new funded trader with 50K of buying power. Thanks for coming, Luis.
Thank you very much, Michael.
Yes, for sure. So, Luis, we're going to talk about your trading style today to share some insights on how to pass the evaluation and generally about trading. You've been around for a few years, so you already got your experience. And tell us a little bit about where you started, and we'll go from there.
Yeah, sure. Look, I have been involved in the markets for a long time. I have a background in finance, and I started in the markets buying stocks for investment. But then things started to get a little bit more exciting. I started reading a few more books, and I got into a bit of a systematic trading approach. I read a few books from Larry Connors, and I did a course with Amy Broker, which is a backtesting software. And that was really exciting because I started to learn about all the metrics, understanding how systems work, which ones work in which different type of markets. And it was fantastic to validate hypotheses as well. So that was, not losing money, and I can see how I would have performed if I deployed different type of systems. And things started to get more and more exciting. I joined a trading group here in Australia of day traders, and that was pretty much based on catalysts. So trying to understand the earnings of the company, any market releases that have an impact on the share price, and how you can profit from trading setups based on those catalysts. Never really paid too much attention in the American market, primarily because of the time difference. It's basically, I'm sleeping at the time. But then I realized that there's the pre-market, which works really well for those in here that actually have a day job. So I started considering the American market for that reason.
Nice. And during the time when you started, you only did systematic trading, like algo trading, or you didn't do any manual?
No, the systematic part of things for me were more about really understanding the edge of the systems and to understand how the market operates. And for example, the one system that people use a lot is about, how would this perform if I just bought the stocks that are going up over the last month? That in itself already has an edge.
Yeah.
And I tested multiple different variables such as volume. I did RSI on volume. How is that performance in the markets if I just use the 200 MA, and then basically trying to understand what would happen in different market periods of time frames, and how that would impact the drawdowns, how that impact the win rates, and so on and so forth.
Nice. So the execution was manually. The
execution was manually. It was manual, and I was looking at weekly and the daily time frame. It was not really focused on the day trade, but that changed when I joined this group here in Australia.
Nice. And do you prefer to do day trade or swing trade?
I do prefer day trade. I like that you can effectively use leverage. I trade here in Australia using CFDs, and then we can effectively have leverage and get some pretty good returns if you become good at it.
Yeah, get it. All right. So you've been trading for a while, as you mentioned, on your own capital, and then you found Trader Pool, right?
I was really surprised to find out that it was so accessible to retail traders such as us to have the opportunity to do an evaluation without having to show a track record of your own account to actually be able to join a prop firm. So when I found out through listening to a podcast, Chat with Traders, I decided to have a go. And that was last year. There was a lot going on in my life. I was looking for a new job, and I ended up failing the valuation. But now I had more time. I did some backtesting on the small cap side, particularly on the short side. And I did find that overall you do have an edge. And I used that for the evaluation. I applied my setups. I have currently 2 setups that are short and 1 setup that's long. And I used that during my evaluation. The first week, I was really surprised because the market was so bullish, which was very different market regime than it was last year when I did the first evaluation.
Yeah.
And that shows on my equity curve. But then later on the weekend, I had a look and tried to understand what was happening because I was on a drawdown. And I changed a few parameters, and then I quickly recovered from the drawdown and was able to end up the valuation successfully.
Nice. Very nice. And like you said, it's not the first time that you're doing the evaluation. So the first evaluation, you terminated the account, right?
Yeah. So the first evaluation was, I think at the time, it was a $25,000 evaluation. I knew it would be difficult to pass. It's not easy to be super successful. It's a lot of work, and you have to know a few things to be able to pass. You have to master the platform, which is really good. But for anyone who's starting, you have to feel comfortable and you have to understand it. And then once you become good at executing, if you have your setups, you should be able to pass evaluation. I think there's a lot about discipline, risk management, being able to be patient, and I think people should be able to pass if they put in the effort.
Nice, definitely. And I see many traders that doing a few attempts, but as long as they keep pushing it and as long as they learning from the previous attempt, they can actually pass the evaluation and become funded, definitely. Liz, I'm going to share my screen and show the guys at home your dashboard. For those of you not familiar, every trader gets his own dashboard, and you can track your stats and see the progress generally. And here it is. Okay, so we're looking at your account right now, the flex 50K, meaning unlimited time to pass the evaluation with $50,000 of buying power. You need to reach a certain amount of profit, which you did. Max loss, daily pause, a few parameters, rules parameters, and this is your trading curve. You started kind of rusty, right?
That's right. So that's what I referred to in the first week. That was a bit challenging.
Yeah.
Second week, I have adjusted the parameters of my setups to account for the market that's now much more bullish than it was last year. And then I quickly recovered from the drawdown that I was on.
And it's still amazing to see, even if it took you a little bit to find your rhythm, at the end, you started on June 2nd and you reached the target on June 12th. So like 10 days of trading, and that's it, you're done, you passed the evaluation. There are guys that do it one day, but still 10 days, it's incredible as well.
The challenge is that when you are in a drawdown, you have to reduce risk significantly, and you have to make your way back much more slower than if you were not on a drawdown. And that's effectively just the mathematics on how things work. So for me, it was about being disciplined, being patient, wait for the setups, and slowly getting back into the profit range.
Yeah, 56% on the success rate and risk reward 1 to 3. Both are pretty, standard, let's say, and in a positive way. And looking at
so I did my metrics for the second week, which is when the equity curve starts to go up, and after I had made the adjustments to my setups. And in that scenario, I did 72% win rate and a risk reward of 1 to 5. And that you can see changes everything.
Exactly, because it was interesting to see, as you just mentioned, before the breakout and during the range, or during the rusty time, what was the success rate then? Do you remember? What was it before the breakout?
I didn't do the maths for that.
Okay.
But it would be pretty low, particularly because in the first 2 days, that's when the drawdown really happened. It was a surprise for me that the market was so bullish. So I went down, and then I went, okay, now I got to go.
Looking at your trades, you go long and short. That's good. So small caps, obviously, as you mentioned. a lot of those. Did you ever try to trade also large cap?
I do not in the evaluation.
Just one maybe on Tesla here, but interesting something that you mentioned about the market being bullish. So you do see that it's affecting your trading, right? Affects your trades when the market.
Yeah. So when I did the evaluation, yeah, definitely. So when I did the evaluation last year, it was like the stocks would go up 50% or so. Now you can see stocks are going up by 150, 200, 300 all the time.
Yeah.
It's like multiple stocks a day. So that just shows that the market regime is different, and you have to adapt. So when I started, I was like, okay, so I cannot short stocks that are going up by 50%. I have to wait for these stocks to potentially go up 200 or 300% before I go into an entry.
Okay, so that's good what you just mentioned. This is basically one parameter when you understand the market conditions and say, okay, it should go 200 or 300 before I short it. What other parameters do you use in order, or rules do you use in order to short, to know when to enter?
So I look at the tape as well. So my position size, for example, would be relying on that. I want to see the action on the tape, how much volume is coming in, how quickly it's coming in, when it stabilizes, and when you have buyers coming in and the buyers coming out. And I think to understand the tape, you just need to kind of have a bit of screen time to get a feel for it. It's kind of a heartbeat, and this is very helpful for to time your entries and get a feel for whether or not the stock is likely to spike again or is likely to reverse.
And do you feel like it's the same concept when it comes to trade like mid cap or large cap? You can do roughly the same thing? Yes,
it is. Look, based on my experience and the backtests that I did, you do, for a stock to continue to go in the direction that it is, you need volume to continue to come in.
Yeah.
So if I use the RVOL primarily here in my trades, and if our RVOL starts to reduce, then it's likely that you're going to see a reversal. But if RVOL keeps going up, it's more likely that you're going to have a trend intraday, based on my experience.
Just for the guys that are not familiar with RVOL, relative volume. So if you're using RVOL, are you using it for intraday?
Yes, that's one of the main parameters or indicators that I use.
Okay, nice. Amazing. So first of all, thanks so much, Luis, for that. I'm sure the guys that just listened will get a lot of insights. Let's maybe talk a little bit about your process with Trader Pool. As you said, you did the first evaluation a year ago, and you did your second now. Do you see any change? And it's interesting, just from a historical perspective, anything changed in Trader Pool, the way that something that you know?
To be honest, when I did my first evaluation, I didn't really put too much time and effort because I just had too much going on. My take at the time is that everything was actually quite good, the platform. But now I was really happy in the second time because pretty much every single stock that I wanted to short was available to be shorted, which is not necessarily the case everywhere. The platform works really well. I think it's, based on what I've seen, I think it's faster now than it was. And the other thing that's fantastic is that there's no cost for locates. So it's been a pretty good experience.
Amazing. That's great to hear. All righty, Luis, thanks so much again. And for those of you guys at home want to check us out, go to tradethepool.com. And that's it. We'll see you in the next video.
Thanks, Mike. I appreciate it.
Likewise.